Time to get your portfolio queries checked. I have with me Aditya Shah, founder, Hercules Advisor, who will be answering all your portfolio queries. Aditya, hi, good evening, and welcome to the show. And let's take Rahul's questions first. Okay, I think I have Rahul on the phone line with me. Rahul, hi, good evening.
Hello, good evening, ma'am.
Hi, you have invested in two thematic index funds, is that right?
Yeah,
Okay, Nifty 500 Momentum 50 Index,
yes.
and the other one is?
Actually, I'm thinking about to invest in ETF in the same category, the same with the same name. So, is it the right decision?
Specific reason why you want to go with the same kind of ETF?
Due to cost advantage?
Cost advantage. And what about the return
Yeah,
advantage?
I think the returns will be same.
Okay. All right. Let's Aditya analyze that. Aditya, okay, cost advantage, definitely that's going to be there. But then how do you look at returns? I mean, see, passive strategy is definitely a go for strategy right now. One need to have a good mix of active and passive in the portfolio. But then if he's someone who's just starting out, maybe one or two funds could be fine. But going ahead, you really need to consider having the advantage of actives in your portfolio as well.
Definitely. Definitely, first of all, investors got it right that passive funds do have a cost advantage. However, active also have the possibility to outperform, and the investor is giving up that strategy. Investing all your money into just thematic fund, I don't think is a good strategy. It contains a lot of risk. During times of outperformance, these funds will do really well, but during market downtime, these funds could really struggle as momentum dies down during downtimes. So my perspective to investor would be to shift into a diversified fund and to build a mixture of active and passive funds. Active fund, I would suggest the investor to put an active fund. If the investor is starting out, a large capish fund or a flexi cap fund would do. A quota flexi cap fund or a paramedic flexi cap fund would really do. I would not suggest to have two momentum strategies inside the portfolio. Try to have an active strategy which is oriented towards a large cap. And as the investors' experience in the market really matures out, he can move to a mid cap and a small cap kind of a strategy, but not to momentum type of a strategy within the passive space.
All right, that's the solution and recommendation to you, Rahul. But then I also have Mr. Ranjan Kumar on the phone line with me. Hi, good evening. How are you doing today?
Hi, very well. Thank you so much.
Hi, thank you so much for sending us your question. Ideal mutual fund allocation for 85,000 monthly SIP, 100 CR corpus by 2050. Is that right?
That's correct.
You already have a portfolio?
I do. I do. I think most of my portfolio is mutual fund only, and I am
Sure.
primarily into active.
Have you
I think
shared your portfolio with us?
I don't think so I've shared my portfolio.
Yeah, that is what, because I don't want any repetition. You know, what if Aditya recommends something and you already have it, then it won't be of any use. Okay, so whatever details I have with me right now,
Yeah,
53 lakh is something that you've already achieved. So
correct.
congratulations there. This 85,000 is a separate amount that's already going on, right?
It's a SIP, yes.
Okay, that's the new fresh amount that you'll be putting up. So let's have a new
Correct.
portfolio and then later on you can see and then maybe come back again if there's any repetition. All
Surely.
right, Aditya.
First of all, the 53 lakhs lump sum amount that he's got and the 85,000 SIP that the investor is going to do, if we look at 10 to 12% return over a period of 25 years, the investor will only achieve 25 CR and not the 100 CR that the investor is set out to get. So the investor must increase his SIP. The SIP must at least move to a quantum of 1.5 to 2 lakhs. Uh, Again, slowly and steadily increasing the SIP would really help. Since the time horizon for the investor is really very long, I've suggested a Kotak Flexi Cap Fund, a DSP Small Cap Fund, and a UTI Nifty Next 50 Index Fund. So index fund, a mid cap fund, a small cap fund, and to strengthen the portfolio of Flexi Cap. All these three funds are given. Investor must look at his existing portfolio, and if these three funds are not there, he should SIP them and slowly and steadily get the existing portfolio here as well.
Aditya, I mean, my time is up and I really wanted to end the show, but I have to ask an SIP of almost 1 to 2 lakhs and just 3 funds, how can he divide this? Do we need more 2 funds?
No, so these So these three funds, the investor must allocate at least 50 to 75% into the small cap space and the mid cap space, which is the DSP small cap fund and the UTI Nifty Next 50 fund. This is because the investor's time horizon is 25 years. 25 years is long period of time. And if his bias is towards the small and the mid cap space, the possibility to generate a higher return as compared to the large cap space is always there. So 50 to 75% over the next 15 years must be towards the DSP small cap and the UTI Nifty Next 50 fund. The 25% rest of the SIP should be oriented towards the Kotak Flexi Cap fund. I believe 3 to 4 funds are more than enough. If you keep introducing more funds, they will only have overlap with the existing funds, and I don't recommend to have it 4 or 5.
All right, so that's the take for you, Ranjan, and I hope it's helpful. With that, it's a wrap. Thank you so much, Aditya, for being on the show and helping our viewers with their portfolio queries. But before I sign off, it's been a roller coaster ride for the world, and yet Indian benchmarks have been as range bound as they can be despite record SIP flows every month, geopolitical tensions driven by Trump's tariff, and fresh concerns over derivative trading. The Indian market seems to be holding steady over here. But then, what's the way forward? What are the next big themes? And will India's consumption boom sustain next week on Monday? A very special guest will don the hat of ET Now and ET Now Swadesh's editor to help our viewer navigate this uncertain backdrop. Stay tuned for an insightful trading day.
From managing wealth to headlines, he has shaped investment journeys across India. And now he is curating the newsroom. His views moves markets. And this time, he is setting the agenda.
Hi, I'm Swarup Mohanty, the guest editor on ET Now. Catch me on 21st July, leading the conversation on money and markets, only on ET Now, where you rise with India.